China has set its economic growth goal for this year at about 5%, with a fiscal deficit target of around 4% of GDP. Bloomberg's chief North Asia correspondent, Stephen Engle, is joining us now. Stephen, give us some insight into your takeaways from these initial comments and these targets that were set by China.
Yeah, well, so the leadership here, led by, of course, Premier Li Qiang, who gave the work report in the building right here, which is the Great Hall of the People. Of course, we're just across the street here from Tiananmen Square and the Forbidden City behind me. They basically beat expectations, or met or beat expectations that we had leading into the National People's Congress. And that's why the markets responded the way they did. I mean, that's a pretty bullish outlook for GDP growth of around 5%. It's the same target that they set last year and met by the end of the year. And that's without a Trump trade war. So everyone is kind of saying, well, with this trade pressure coming and tariffs, where are they going to find that growth? Well, that's why, as you mentioned, they did lift the fiscal deficit target to 4% of GDP from 3%. They like to be a lot more prudent. They don't want to run up debt levels. That's been a consistent theme of late. But there are pressures that are facing in the Chinese economy that they have to address. And they must find viable market here domestically for what some have claimed to be overcapacity in many industrial products and a less reliance on exports. So they must boost domestic consumption, domestic demand. And to do that, they are going to unleash a fiscal stimulus, trillions of yuan into this economy, as well as alleviate the debt burden at the municipal and provincial level. The central government will take on more sovereign bond issuances and take on more of that debt burden, and also, of course, raise that ceiling. So they're still fairly bullish about the economy, despite the external and internal. Keep in mind, the property sector is still sluggish and has not necessarily put a floor on their several years-long problem. So, but they're bullish.
Stephen, why didn't we hear any direct targeting of what the Trump administration has said or is planning to enact as far as it goes with tariffs on China?
Well, we did from the Ministry of Commerce yesterday. They had the retaliatory measures to the tune of $22 billion on a number of different U.S. products, mostly agricultural products like sorghum and soybeans and corn, beef, wheat, cotton, and the like. So the Ministry of Commerce will directly comment on that. I did not expect Li Qiang to mention the United States or the tariffs, other than the external situation is quite challenging. I paraphrase, of course. Now, you know, after 2024, they were very bullish about that year. Of course, they met the target. And he did say achieving that growth rate in 2024 did not come easy, quote unquote. And he did mention the headwinds internationally, as well as acknowledging the weak consumer domestic demand. So he didn't go through that hour-long speech without addressing the external situation. They just did not name the tariff situation or the Trump administration by name. But obviously, it's at the backdrop of a lot of this stimulus.